Hello everyone, welcome to 32Soft's February webinar. I'm Denise, and with me to present is QAD and MRP expert Don Lindsey, to whom I will turn things over in just a moment. I will hand off to Don Lindsey, who is a business analyst for several companies and has 18 years of QAD ERP experience. Throughout those years, Don has worked with 7 different versions of QAD. So, Don, whenever you are ready.
Well, good morning to our February webinar, as Denise had indicated. This is basically a continuation of the November inventory webinar, and we'll probably continue this into an inventory part 3 later in the year. So on November, we talked about transactions, setting up inventory, the transaction history, the types of transactions that we had. And today, what we'd like to try and concentrate on is what we call the perpetual record. We'll talk a little bit about taking a physical inventory control, a little bit about cycle counting. We'll talk about this gentleman called Mr. Pareto analysis, and we'll mention some other types of inventory audits and random sampling techniques. So as I have always said, every webinar, there's always lots of new things to learn about all of the subjects that we cover regarding QAD and ERP. If you have a question as to how I use a particular term or phrase, please send either Denise or I an email, and we will endeavor our best to clarify how that particular word or phrase is used. And again, a solid set of work instructions and a good company dictionary or wiki is always recommended for any of the areas of QAD. First of all, I'd like to talk a little bit about what is called the perpetual record. The perpetual record is defined as a computer or a manual record or document on which each inventory transaction is posted so that the current record of the quantity on hand is updated. Or, as it says, perpetual record is the continuously updated quantity on hand and the audit trail of how it got there, receipts, misuse, cycle count, scrap, etc. Why do we do this? Well, we need to have a correct statement of the balance sheet. The balance sheet is a statement, an accounting statement that we covered last year in our accounting webinars that says what the value of the company is, or what the balance of the assets of the company are. So it's important for that. We also need it for the status of the business. It's the basis of MRP, schedules, all the activities in operations feed off this thing called the perpetual record. The perpetual record is, as we see, usually a computerized system, but for those of us that are old enough, we remember what was the old Cardex system. So prior to about 1965, we used this Cardex system, and we had a record of the part number, the description, and everything that had to do with that part number, all the transactions, and we kept a running balance of our perpetual record. Luckily, today, in the 1970s, we developed, along with Pam and Carl with QAD, Ollie White and George Plaza with MRP, the ability to have a computerized perpetual record, so that now the continuously updated quantity on hand and the audit trails are virtually online and instantaneous. So our goal is to have that inventory valuation as accurate as possible. It basically is made up of the inventory control system itself, the physical control of the inventory, a transaction reporting system that we saw last November as the transaction history, and then Always got to make the bean counters happy so that we know what the value of that process is. There's some essentials for maintaining this accurate on hand. We need good forms design. There was an old friend of mine, Dennis Fisher, who taught me when I was a young man. He used to say, it's not move, 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 then paper, paper, paper. It always has to be move paper, move paper, move paper, so that you're always recording the transaction as closely as possible to the actual movement of the information. We talked about, and we'll talk a little bit more about the transactions, the types of transaction we use in the transaction history, a transaction record, summary, detail reports. Probably the most familiar to us is 321.2, the transaction by item history. And then for procedures on how you do those transactions, for every type of transaction, you need to know the approvals, the handling, data entry, documentation for every workstation and operation in your facility. Allocations, I talked a little bit about allocations last time. It's basically part of the perpetual record that is the reservation of a on-hand value. It is basically an uncashed stockroom receipt, and we do it to ensure that we have a projected available of what we think we're going to have at a particular point in time. It authorizes the issuance of material to either work orders as shippers, sales orders, and as we'll see, it facilitates in our cycle counting. There's a minimum amount of information that we need to update the perpetual record. We all know about the 5 W's, what, when, where, why, and how. Well, or who. We also need to know the quantity that we're doing and how we do it, what transaction document number. There are over 590 maintenance screens in QAD. Now, all of us don't use all of them, but each menu that we do use needs to be defined by a wiki and a work instruction. Lots of different types of transactions instead of, or in addition to the menus that we have in QAD, we have shop travelers, shippers, move tickets, BOM updates, recounts, return to stock. All these different types of transactions need to be understood in detail, and as I mentioned, a wiki and a work instruction for each one of those. The continuously updated quantity on hand is auditable through what we call the 321.2 transaction by item browse. We went through that in November. It's maintained in RTR HIST tables. And here is a list of the transaction types available in QAD. Not all of them update the quantity on hand, the perpetual record, but those that are underlined in underscore and bold actually update this perpetual record and maintain the accuracy of what we have on hand. So now that we understand a little bit about the perpetual record, let's talk just a bit about the cycle counting. What is the definition of cycle counting? It's an inventory accuracy audit technique where inventory is counted on a cyclical basis throughout the year. It's defined and the count is regulated by certain criteria, and we'll talk about those criteria in just a second. There is also the items are counted in a certain sequence depending on their importance, and we'll talk about how we do that. And the last issue is that cycle count requires trained and dedicated personnel. It's not just some stock guy out in the back, receiving guy that goes out and counts inventory. This is a trained, dedicated person who understands how transactions are used. And so therefore, it costs money. One of the things that I just annoys the living what's it out of me is when there's a cutback, one of the first things that management does is they count this cycle count program. That's the last thing you want to cut back is on that cycle count process, because it's going to buy you lots of good benefits. The purpose of cycle counting is the identification of errors. and the correction of the conditions causing those errors, so that we have this correct statement of the assets of the organization. So it's not just correcting errors, it's getting rid of why errors occur. The advantages of cycle counting are that it's timely. The correction of problems happens almost immediately. There's little or no loss of production, as we'll see with the physical inventory. And we can apply the logic of root causes to the elimination of these errors and their occurrences. It's a high level of inventory accuracy. The financial goals of physical inventory are, again, the correct statement, the minimization of the net variance. Now, this is from a financial or an accounting point of view. And we'll see that there's a great difference between the accounting goal of physical inventory and materials management, because in an accounting sense, we want to have a minimum net variance and we want to make the auditors happy. That's always an important thing for the finance people. But in terms of materials management, we need to have accurate quantity on hand, because that's the way that MRP, scheduling, shipping, everything is based upon that quantity on hand. So the more accurate our quantity on hand is, the better off we are in terms of executing our plan. And then the correction of errors, obviously, through cycle counting, and then ultimately the cause of the error. If somebody back in the stockroom is writing 7s like 3s, go teach him how to write 7s. In QAD, it's a relatively simple set of menus. You've got cycle counting menu, which is a cycle count worksheet print we'll talk about, the results entry screen, and the results report. So there's basically just 3 reports. Then obviously the 3.2 inventory by item detail. We talked about the transaction history, transaction by item browse 3.21.2, where you can see the different kinds of transactions that are affected by the cycle count program. Before we start into a discussion of the cycle count program directly, I wanted to talk just a little bit about this gentleman named Vilfredo Federico Damaso Pareto. He was an Italian engineer, socialist, economist, political scientist, and a philosopher. He made many contributions to economics, particularly in terms of income distribution and in the analysis of individual choices. He was born in Paris, died in Switzerland. And he basically came up with this thing called the 80-20 rule, or segregating or separating the significant few from the trivial many. This is a concept that basically states that a small percentage of a group accounts for the largest fraction of the impact or value, etc., of that group. In terms of inventory, we talk about the 80-20 rule or ABC analysis as 20% of the inventory items normally are comprised of 80% of the inventory value. There's lots of other examples that you can see in real life that are examples of this 80-20 or ABC or Pareto analysis. ABC classification is basically a classification of inventory in descending dollar usage, where items are classified by ABC. And the underlying principle is we apply more effort to make the A items accurate than we do the C items. It's probably one of the most used analysis tools in business. Just a quick example of how we do ABC, basically 7 steps. Calculate the annual unit usage, determine the annual unit usage in dollars, rank the parts, calculate a cumulative value, cumulative percentage, identify your ABCs, and upload to the system. So here we've got a set of 10 parts, their unit usage and their unit cost, and we simply are going to now multiply the unit cost times the unit usage to come up with this annual dollar usage. And you can see that in total, we have 38,250 in this particular population of parts. The analysis then is we calculate the cumulative dollar usage in descending value. and then we can calculate the cumulative percentage usage. So you see the first part is 24,000, accounts for 63% of my total population, a classic example of the ABC analysis. Then we continue on down, and then based on our analysis, we assign various ABC codes to those. And those ABC codes are entirely up to you, how you want to measure them. Then we enter the codes into the item master file in 1.4.3. You can also use 36.3 or 3.6.3, the item ABC analysis report and update. This you can run. I'd advise you run it several times for all different kinds of combinations. And these two checkbox, update ABC class and update annual usage, are how you are going to actually update the values in QAD with this ABC analysis. I would use caution with this tool because this is very important. It's going to set how your cycle count program runs, and you need to understand what's going to happen with your selection criteria and update. You can see the update in 1.4.16 or 1.4.inventory 3, where the last count is updated. And this last count is critical to the way that you're going to do your cycle count, because when you run your cycle count print, it's going to use that last count calculation along with the ABC codes to give you your count process. So how do we do cycle counting? Well, there's a rule. You do cycle counting, but you always have to be prepared for a physical inventory. We'll talk about physical inventory in just a second, but it's basically a statement of have the place clean. Know what you're doing. There's the old 5S that comes from our lean brothers and sisters that say sort, set in order, shine, standardize, and sustain. Make sure that inventory is visible, that everything is labeled in inventory, that you don't transfer parts without it being recorded in QAD, that all of the items in the containers have labels. So this is basically the first rule of both physical control and cycle counting. The process, since we've only got 3 basic menu items, is first of all, you print your cycle count worksheet. Then you go out and count the parts. You come back, you enter the parts in your cycle count results, the 313.2, with an initial count. Then you recount those parts that are out of tolerance. We looked at the 3.24 last November and saw that we set those kinds of tolerances in the inventory control file. And then after you've recounted, then you put the recount results in 3.13.2. You can see that the menu selections for some of the older versions of QAD are 3.13, 3.14, and 3.15. And as we look out into the future, 2014, 2018 EE, and now the 2019 Adaptive Enterprise, there's additional menus in that cycle count menu process, but basically it follows this sequence. So you produce the cycle count worksheet, note the relationship between your 3.24 inventory values here. You can name or count a number of parts based on ABC classifications. You can sort by items. You can include or exclude either customer assigned or supplier consigned material. You can print the on-hand quantity on the pick list if you want to. That's sometimes not a good idea. Include negatives, zeros, include phantoms. So you need to experiment with how this 3.13.1 cycle count worksheet is printed. Here's an example of that worksheet. This is basically a turnaround document, and you need a procedure for how to handle the distribution of that, who gets it, what time, how it's recorded, and how these are processed into QAD. This is just a little frequency calculation that can tell you how many people you need to do physical or cycle counting. If you've got a number of items that are classified ABC. You're going to count your A items probably 12 times a year, every month. Your B items every quarter, your C items maybe twice a year. You could total those up. If you have about 250 work days per year, that says I got to do 184 counts per day. Well, how many people does that mean? So I can calculate how many people are going to be required to do my cycle count program. The cutoffs of cycle counting are critical. This is one of the key considerations of a cycle count program. You want to minimize or eliminate the movement of inventory during the count process between the time you do the 3.13.1 cycle count print and the input into 3.13.2, the cycle count results entry. There's lots of ways to work these cutoff controls. You can count during operation or non-operational shifts, at the end of the day, beginning of the day, hold documents for the next day. Probably the most effective is the use of what we call the hang tag. So when you count, there's also other types of selection criteria for cycle counting. Perpetual record equals 0. That's a good time to count. You haven't got any, so go verify you don't have any. Is the item back ordered? When we move items between locations, the stock guys are already handling the material, probably a good time to cycle count it. During the pick process, when suspected errors occurred. So there's lots of different ways to do it, but if there are no other resources and you have to do it during the shift, use a hang tag. And a hang tag is simply a piece of paper, pre-printed, computerized, handwritten, that gives the people in the stockroom the ability to record what has happened to a particular part in a location, and then it gives the cycle counters a complete picture of the movement of that item during the process, so that you can verify the count and understand what has caused the variance. Lots of tools and techniques for counting, scale counts, hand counters, location planning systems, uniform container sizes and qualities. All of these things should be in place to ensure that you've got an accurate representation of that quantity on hand. Once you've gone out and counted, then you come back into 3.13.2, and 3.13.2 has basically two options. First is the initial count. If you put in the initial count and it matches, or the quantity that you counted matches the criteria for acceptance or reject in 3.24, the inventory count, it's going to accept that value. If it doesn't, then you need to investigate why you've got an error. Was there a data entry error? Was there a count error? Did you count the right part? And then once that count has taken place, you come back and do a recount, and then that updates the balance to the quantity counted. 3.13.3 is the results report, and here you can see this gives you the beginning location balance, quantity counted, the quantity change, and the amount change. So these are the values that you want to pay attention to in terms of count versus that book value. Here in 3.24 is where we set that tolerance, and this is to trigger a reconciliation. Here we've got A items less than 5%, B items tolerance is 2%, or excuse me, 0.5%, C items are 5%, along with a $100 value. So here's a simple example. We got part number 1, 2, 3, 4, 5. It's a C item. It's worth $5. I actually count 500. Record says I've got 525. Well, that means that I've got a 4.8% variance on count, which is less than 5%. But when I do it on a dollar value, it's 125, which is greater than the $100 tolerance that I've set on. So the question is, should it be adjusted? You've got a couple of different ways you could go. You could adjust it or not, or if both measures are within tolerance, then you probably, or outside of tolerance, then you probably need to do a recount. So you really need to understand the procedures, the guidelines, what the auditors want, what the accounting people want, and it needs to be understood and involved with all people in the organization. Once you've determined that a part needs to be recounted, a lot of systems have a recount ticket that you can print, or you just give them back the 3.13.1 cycle count print, and then they go out and recount it. But again, you need very strict procedures on how and why you recount inventory errors. So this is just a brief statement of the steps you might go through. Compare the actual to perpetual. Test your reject acceptance criteria. Maybe you need to adjust the reject criteria. Are you going to recount it? Do you go out and recount it? And then adjust the count when it's justifiable under the criteria. Then ultimately you want to reconcile and find the cause of that error and fix the problem so the error doesn't occur again. There's all sorts of reasons why parts are out of tolerance, missing documents, incorrect quantities, backflush problems, work order close problems, legibility, wrong parts. So you need to have some methodology of identifying there. A lot of companies use either the remarks field or reason codes to identify the reasons for cycle count errors so that you can do that analysis or that Pareto of why things are being in error and go out and correct them. This is just a simple checklist. And again, the basic goal is to determine the cause of the error. So check for all missing documents, check the where used, check incoming inspection, and check the MRB. And this is why you need trained individuals doing cycle count, because they really need to understand the whole flow of the product from the point of receipt in through the stockroom, out to the work orders, back in, and then finally into the shipping. And so you need to have a method of tracking and understanding what those are. So ultimately you retrain and eliminate the cause of those errors. When you do the cycle count recount, you go back into 3.13.2 and you set it at recount, and the recount then changes the inventory balance to the number counted. How you calculate your cycle count accuracy is really up to you. I mean, it's got to be approved by your external auditors and your accountant. I've seen dozens of these kinds of calculations where you take the system, the actual count, calculate your variances, and then just basically keep track of whether you're inside or outside of tolerance. So once you get all of your activity, you simply run this analysis of what your accuracy is, and you come up with, in this particular case, a 53% on-hand accuracy. Boy, that's pretty bad. QAD, MRP, scheduling, shipping isn't going to work very well with a 53% cycle count accuracy. However, accountants might be very happy because their net dollar variance is only $123. So from a financial point of view, maybe I've got a fairly accurate inventory. From an on-hand point of view, no, you need to improve it. So we want to pay attention to our quantity on hand accuracy, not just the net dollar variance. So now that we understand a little bit about cycle counting, let's talk about physical control. So the ultimate purpose of both the cycle counting and the periodic inventory are to verify the financial value of the inventory and have accurate representation of that. Cycle counting, you use experienced people, it's timely, corrected errors, few mistakes, minimum downtime. Periodic inventory is probably a little more problematic because you're going to use lots of inexperienced people who lack motivation. There's usually no correction of causes of errors. There's lots of mistakes. You got to shut down the plant for a couple of days, and really you've got a whole new set of inaccurate records with a physical inventory. But as I said, you may be required to do a physical inventory. depending on what your audit and accounting finance people see. So you always want to be prepared for that. Lots of prerequisites for good physical control, secured stockroom, management education, a high climate of expectations for accurate, strong supervisions. The best warehouse guys I've seen are guys who go out there and kind of kick ass as far as inventory accuracy concerned. As a planner, this always used to drive me crazy. They wouldn't let me in the stockroom, but keep people out. Question is, would you want your bank to operate like your stockroom? I would say probably you would want your bank to operate like a well-run stockroom. Lots of support tools. It's not cheap to have inventory. You should have a cycle count process. You should have uniform quantities, calculators, scales, terminals, adequate space. I remember working with several organizations where every morning they didn't have enough space, so they had to get their forklifts and drive the pallets out in the parking lot, leave them all day, and then drive the pallets back in at the end of the day. Not a good way to maintain accurate inventory system. Once you determine that you're going to do a physical inventory, you have to identify the physical inventory team. You've got to have a physical inventory manager, hopefully somebody that's done it before, understands what's going on. Your materials manager, warehouse manager, you got to have your buyers, the shop guys out on the floor, because they're going to be counting parts, cost accounting, VP of operations, the CFO, and then finally your external auditor. So there's lots of people involved in that process. Probably, at least from my point of view, data entry and IT support, very important, because that's going to be the key punch. You got to be concerned with hash total, batch numbers, Wi-Fi spots, the network, all of that activity. Don't pay any attention to this guy. He just makes the thing happen. So physical inventory. Physical inventory in QAD is in 3.16. We'll go through most of these menu options, but you can see the difference between 2014 EE, 2018 EE, and I just looked at 2019 EE, and there's a whole additional series of menu selections for physical inventory in the adaptive enterprise version. So you need to kind of keep track of what you're doing, but it basically does the same process. Annual physical means you count inventory anywhere it is. You do pre-counts. You've got to do good housekeeping. Parts that are on the dock, in MRB, stores, stage, at the vendors, supplier consignment, customer consignment, finished goods, in transit if you've got distribution centers. I've even seen install base included in physical inventories and fixed assets. So it could be a very involved process over an extended period of time. You don't just do physical inventory in a week. It usually takes at least a month or two to plan and organize for the physical inventory. As far as QAD concerned, the first step is to delete and archive your old tags. Then you can either freeze the balances, run your report, print the tags, or you can print the tags, freeze the balances, and run your reports. I'd recommend the left, that you freeze the balances and then you create your tags. You then go out and do the manual count of parts. You enter those into the tag count menus. You account for uncounted tags. If everything is fine, then you run your variances reports. If everything is not fine, you got to go back and recount things, enter into the tag recount menu. And then finally, everything is complete. You run your uncounted tag report and update. You run your valuation, and then finally you update your inventory balances, and physical inventory is complete. It's usually at least a 2-day process, if not 3 normally. So the first step is to delete the tags, and you don't need all the tags that were in there for the last inventory. They don't need to be maintained. So you delete the inventory tags. I would always keep that tag delete record for posterity. Make sure that you keep track of what those tags were. So if you got any questions. Then you update or freeze the inventory balances with 316.6. This then allows you to have a record of what the inventory was before you start the count. So you want to make sure that you've done all your transactions, your cutoffs are clean, and that you freeze the balance and have the ability to generate the tags for everything that you need to count. It doesn't really do anything. It's just all the physical inventory functions run off of this thing called the inventory balance that is frozen. Again, your frozen value of inventory, always maintain that printout for your records so you know exactly what it was before you started counting. Then you can create your tags. You create the tags in 316.1, item tag create, and this creates a inventory selection for every site, item, location, reference, lot reference, gets its own sequentially numbered tag. Take heed of all of these warnings that are offered to you. Do you want to include or exclude consignment and supplier consignment? It tells you when the tags and what the last tag updated was. So you want to make sure that you keep good tabs on that. Once you've created the tags, then you need to go in and print the tags. So 316.6 is tag print. You are normally not allowed to reprint tags unless you check this little box. Be cautious of that. The rest of these determine how they're going to print on the form. I know a lot of people don't like the standard QAD tags, so I've seen access used to generate tags, progress rewritten progress reports. This is compliments of Robert Cohen out at Dynacast, and so you need to probably have a two-part form that you can use as your tag count. Tag control critical. Once tags have been created, care should be taken to keep track of each printed tag. Keep them in stacks of 10 or 100. Verify that all the tag numbers are there. Verify duplicates, missing tags. The zone supervisors, the people out on the floor and in the warehouse, need to keep track of their tags that there have been issued, and they are usually going to keep their own separate log of what there is, because the #1 rule in the physical inventory, do not lose a tag, because if you lose a tag, you may have to do the process over. 3.16.2 is bulk tag. In most physical inventories, bulk tags are extra tags. Blanks used if you find other items or lose a tag, you can go ahead and use those. As I say, danger, Will Robinson, this can be a total nightmare if you don't keep track of what bulk tags you've created, who's got them, when they were generated, where they are, and make sure that you've collected them and accounted for them after the physical inventory. Tag report 316.3. You can run this tag report. It's okay, but I would recommend you put this into Excel and keep better tabs of it. Then you go out and count your inventory. 21 steps. I want to thank this gentleman, Dan Webster at Deputy. These are 21 of the steps that are a good idea to do for physical inventory. Plan, select your counters, schedule, make sure your locations are current, get the tags out there, stop movement, and then finally do the count, confirm the tags, check items, and analyze your reports. You count inventory, so now you got the counters going out in the physical warehouse. Don't send people out cold turkey. Make sure they understand what is going on. Also, if you've got subcontractors, customer consignment, or supplier consignment, you want to make sure that the buyers, sales guys, people who do subcontracting processing, understand how they need to generate those tags. I have always used a physical inventory activity report. Just maintain a history of everything that occurred, when you started, when you printed tags, so that next time, if you've got any issues, you'll understand what you did last time. Always document it. Then you do your tag entry process. So for every physical tag, you enter the count that you've actually done out in the warehouse. This can be a time-consuming process. We'll talk about 32Soft and some tools that they've got that you can do. There is no effect on inventory, not until you run the inventory balance update, either in terms of on hand or the general ledger. Remember, we've frozen the inventory, so the reports are that. Tag control. I always like to keep track of the tag count progression so that I know what time tags are out. You can see here that there was a rush to get things done. That's always a good tool to maintain. The area supervisors are responsible for their tags. As I said, the #1 rule of physical inventory, don't lose tags. If you do, I've seen physical inventories cut off, order to say stop, and you redo it. Well, that costs a lot of money. I've seen people fired for losing tags. Missing tag report. You can use various missing tag report, the counted tag report, the uncounted tag report, and update. And then if you go out and you have to analyze all of the variances, look at the value of those variances, and if required, go out and recount parts, and you enter those into 316.2 or .12. Then you want to make sure you've got all the tags accounted for. You can use 316.14 for that. And then you run your inventory variance report. And this variance report then shows you all of the tags that have been entered, the count and the dollar variance. And then there's a number of different reports or warnings that are given by QAD. If a frozen quantity exists or doesn't exist, transactions that occurred after the freeze date, etc. So you need to analyze that, determine what parts need to be recounted, go in and enter those recounts, and then normally you're going to have some sort of spreadsheet that keeps track of that, so you can sort in descending variance value, so that you keep track of all 5,000-6,000 tags that have been created for the physical inventory. 316.7 is tag void update. This allows you to void tags, and if you void a tag, then the inventory balance update doesn't even consider these tags when it posts. With the uncounted tag report and update, you can set tags to 0 so that you can account for the fact that you generated the tag, but it's got a 0 value. And then finally, once you've done all your counts, your recounts, you've analyzed your variances, you've validated and approved the auditors, the count teams, all variances are understood, and the value of the updates have been calculated as to what is going to take place, the balance on hand in QAD is updated by 316.21. This is the most important keystroke of the entire physical inventory, because when you hit this, the quantity on hand is updated. It's updated in 321.2, the transaction by item browse, with tag-CNT transactions and with the unposted transaction register, so that you can go in and you can look at the TR hist, and you can look at unposted transaction file for the impact of dollars on the physical inventory. And that's going to be defined in your product line and your inventory accounts. There are, as I mentioned, some loaders that 32Soft has that can assist in this, because either a cycle count or physical inventory can have thousands of tags, and even on a daily basis, you can have hundreds of cycle counts that are required. So 32Soft has both a 31611 cycle inventory data loader and a 314 cycle count data loader that may be of assistance to you. So remember, the goal of both cycle counting and physical inventory is accurate quantity on hand. It's needed by the accountants, it's needed by us. It makes us operate our business efficiency, and we can trust what our ERP system is telling us. So we talked about perpetual records. We looked at Mr. Pareto, talked about inventory accuracy, the count process, physical inventory, disciplined, well-trained, consistency. Procedures that are properly applied can guarantee that we have a quantity on hand that's accurate. In March on the 18th, we'll continue with a second part of purchasing. I didn't quite finish up what I wanted to talk about in January on purchasing, so we're going to talk about some cost issues. We'll look at supplier schedules, consignment. We'll take a quick look at the portal. We'll talk about supplier pricing and accounts payable. And then in March and April, we'll be attending MUG and the West Coast User Group. MUG's in Oak Brook, Illinois, and West Coast is in Santa Clara, and I'll be doing a little blurb on MRP, how to make it fail. So, are there any questions? Please send them off to Denise, and I think I am finished.
Reach out to us anytime if you think of something that you wish you had asked. For now, oh, hold on one second. I think, okay, Don, you just got a compliment. It was superb. So,
okay, thank you. Just another comment. Both Christian Manga and Olena on the 32Soft team are experts in the processing of the 3.16.11. the physical inventory update, and 3.14 or 3.13.2, the cycle count adjustments. So if anybody's got any questions, I know Kristen has done some work on trying to balance the difference between the cycle count print and the cycle count input. We talked about the hang tag. Kristen has done some work on that. So if you've got any questions, both Alina and Kristen can chime in as to potential solutions. But again, the process is maintaining an accurate perpetual record, because if you don't have an accurate perpetual record, you might as well throw out QAD. It doesn't work very well. Any ERP, SAP, JD Edwards, Infor, they all are based upon the assumption that you know what you have on hand. And these two primary tools that we have, cycle counting and physical inventory, in terms of QAD, are the tools that we need to learn how to use to ensure that record accuracy. So I'll give it back to you.
Okie dokie. And no additional questions. We'll go ahead and move along to be conscientious of everyone's time. In fact, Don already covered our upcoming webinars, and we do have 2 in March, followed by our upcoming conferences that Don also mentioned. But about the webinars, I do want to let everybody know that you don't need to have attended the part 1, or these are kind of freestanding webinars. But if you want additional information, certainly it's available on our website, or if you have any trouble finding it, I'm happy to send anybody a link if you're looking for anything in particular. Just give me a holler. Don also mentioned our upcoming events, the Midwest User Group in March, followed by the West Coast User Group in April. If anyone is attending, we hope you will stop by and say hello, if not in our sessions. Yes. And I'll just finish off by circling back to today's presentation and something Don did mention, the 80-20. And doing something unimportant well does not make it important. And that's why we focus on the important stuff. So Don or Alex, if there's anything else we want to mention today before closing out?
No, I think I've got it. Thank you for your attendance, and have a wonderful rest of the day. And we will see you on the 18th of March, I believe.
Yes, registration for our upcoming events are available on our website, and they'll also be at the bottom of our Encore when that goes out as well. So yes, thank you so much, everybody, for your time today, and we do look forward to seeing you again next month. Have a super day.
Yep.
Bye-bye.